TheoTrade. This is Don Kaufman, December 22nd, 2021. Here we are on a Wednesday afternoon, 20 minutes left inside of the trading session. S&Ps once again bid to the upside. Hey, but this time it looks primarily like it's performance chasing into the end of the year by a lot of institutional money managers. It's one of the things we're actually going to explain here on this evening's video. Give a little insight to some of the trade activity not only taking place today, but more of which you could probably expect even next week. Let's get down to business. So again, the S&Ps are up some 36 points. You know, one of the things everybody's kind of questioning, maybe some holiday trade, things starting to really slow down. For that, we cruise over to the S&P futures, and I'll tell you what. Here we are coming towards the close. They haven't even done 1 million contracts. And again, to put that like in a comparison to some of the previous trading sessions, yep, it finally lightened up a little bit today. Okay, this one is to kind of be expected. However, before you get all excited and it's over, baby, yeah, what's over? Okay, there's actually pretty significant news drops that are still going to happen tomorrow morning. That is, economic data is coming out in the morning, and between today and tomorrow's close, and again, tomorrow's close, hey, listen, that is the end of the week. This is a shortened holiday week. Nevertheless, we are still sitting just shy of a $30 expected move. All right, but this week, this has actually been a fun-filled, again, what is only going to amount to 4 days, but here we are, not even completely 3 days into it, and we've actually touched the lower edge of the expected move. All right, rallied off of it, exploded off of it yesterday. Today, a little bit more upward bias. We're still only a hop, skip, and a jump now from the upper edge of the expected move. And I'll remind everybody, the expected move this past week it's plus or minus, again, $87. And we've not only exceeded it, but again, that's an $87 move to the downside, $87 move back up. And here we are, again, trading 46.85 in the S&Ps. To get really specific here, the upper edge of the SPX expected move is right around 47.08. So does it mean we're going to go to it? Absolutely not. But you can still see and feel a little volatility left inside of this marketplace. All right. So with that, again, I love to update everybody and kind of where we've been on the week. By the way, the QQQ also, of course, everybody's looking at this. It's flying back. But when you actually start to apply auto expected moves, the Qs are not necessarily the outperformer in this particular case. Overall, the QQQ bounced back. The Qs are still well off of their highs, whereas if you were to look at the spiders of the S&Ps, they're only a hop, skip, and a jump, again, removed from those highs. Yet, at the exact same time we're saying at or near highs, we're also talking about a lot of volatility. With that, I'm going to say this, okay? Tomorrow, some economic data, okay? Great. That could actually spark a bit more volatility. But coming into next week, some of that volatility may actually start to die down. And it has a lot to do, again, with what we term kind of performance chasing. Now, what performance chasing amounts to, all right? Institutional money managers, even hedge funds, sending out quarterly statements, or in this case, their end of the year statement, okay? No one wants to have in their portfolio, okay, a statement mailed out with something like, for instance, Peloton on it, right? What's Peloton done on a year-to-date basis? It's down 74%. But I just want to make a quick point. I know you see the S&P's up 35. You see the Nasdaq ripping. It's up 140. Take a look at the advanced decline line. All right, it's, positive to some extent. How could they be beating up Peloton? Listen, it's not just Peloton. All I'm trying to point out here, what performance chasing happens to be is dumping, okay, what has dramatically underperformed. When I say underperformed, let's get really specific. Bring up the spiders. The spiders are up 26% on a year-to-date basis, right? So if I say dramatically underperformed, I'm not talking about just being down on the year. I'm talking about anything that's underperformed the spiders. Here's a great argument. What's underperformed the spiders? How about Amazon? Amazon's only up 6% year-to-date basis. Look at that. It's pretty shocking that in a decent size up day, why are they rotating out of there? Okay, because it's underperforming. Let's bring up Facebook. Now, Facebook, this is interesting because Facebook, you're like, is an underperformer? No, but it's not exactly a popular thing. I mean, it's not dramatically underperforming, but it's also not a popular topic of conversation to have inside of your portfolio. So they're hitting it a little bit. What else do you have? Okay, look at some of the performers and non-performers here. Take a look at Intel. This is one where, again, you got tech that's bid up today, right? And Nasdaq's up almost 1%. Intel getting hit. What else you got? Okay, Twitter. Twitter's down almost 20% on a year-to-date basis. What do? You dump it. As I said, you're going to dump that the same way you're going to dump something like a Peloton, okay? And you could just keep going and going. Take a look at like Zoom. Zoom is down 46% on a year-to-date basis. They're smoking it today. It's not a popular thing to have in the portfolio, okay? What else you got? Zillow, all right? So Zillow, only down about 16 cents, beaten and bludgeoned down 52%. You would think that on these underlyings, that everybody that had to get out is already out, but it's not true. Again, if you have shares of this in your portfolio, you're coming to the end of the year, you got to mail that statement out. It's not exactly popular to have, Peloton, Zillow, okay? One of my personal favorites over here, how could I have forgotten? Alibaba, down 48%. Again, you wouldn't expect this. Why are they hitting it again today? Because this is what performance chasing and gaming markets is. Now, what's interesting about this is I'm actually showing you the stocks that they're selling because they don't want to present those in the portfolio. But the other side of this is, what are they buying? Okay, when I say they, these institutional money managers, okay, what do we buy? We buy what works, Microsoft. Now, it's easy to just say, well, they're buying Microsoft to bid the market back up. But in this particular case, anybody who's anybody, like, listen, if you're selling all the garbage in your portfolio and tax loss selling or just trying to get it off the sheets because nobody wants to see Peloton get mailed out to them, you're like, oh, that thing? Okay, so what do? They have to rotate into something. Remember, institutional money managers, you can't go to cash. You can't go. There is no cash. So what do? I mean, again, mutual fund managers, they have to have like 95 to 97%, whatever assets they have to be invested. So the rotation game kind of ensues. The stocks that are up, you'd expect to be up. You look at something like Apple. Apple's been on a tear lately. Buy it. Okay. Look at Google. Google's one of the top performers, okay, in the entire S&P 500, and it is absolutely the top performer out of what I would term the mega market cap, 70% year-to-date basis. Now, yeah, you're going to find stuff in the S&P 500 that's outperformed it, but you're not going to find stuff, okay, over the $500 billion market cap, okay, that's performing like this, other than maybe something like Nvidia, right, which is up 123%. But with all due respect, Nvidia wasn't a $500 billion plus market cap until a few weeks ago. Anyway, again, this is what performance chasing kind of amounts to. Now, one of the weird things about performance chasing is you start to do it, right? It actually splits the advanced decline line a little bit. In this particular case, the performance chasing includes underlyings that are mega market cap. That's why the marketplace is up. Okay, I've seen this in years past, and it was like kind of an even rotation, meaning that everything that they sold, they turned around and bought. Okay, something in equal, in terms of equal like dollar amounts, and you wouldn't think that the marketplace would go up in that. But in this case, everything in the performance chasing, portfolio is like mega market cap. It's ironic because you even look at stuff like Goldman Sachs. You wouldn't think this is a killer performance, but Goldman Sachs is up 44% year-to-date basis. And again, it's kind of ironic when you start looking down the list. Almost everything today that is up and up big has been big time performers. By the way, I'll bring up stuff like Citi, which is, I'm surprised it's even up today because they're down 1% in the year. So again, performance chasing game. Because this is going on, it'll actually dampen down volatility a little bit. You would expect volatility should contract to some degree coming in towards the end of the year. But at the exact same breath that I'm saying that, right, I also want to give you a very cautious tone on that front. And I'm literally zooming in here to an intraday, 1 day, 1 minute chart. And the reason I'm doing so is, okay, this is a fairly quiet day. We still traded some decent contract size earlier in the day. There's one really critical standout, and that's this, the range, okay? The range of 1 minute candles was phenomenally large at portions of the day. Here's actually a candle we went and traded like, 43, got all the way up to, for instance, 49. You're looking at 6 and 7.1 minute moves in the S&P futures. So before we start high-fiving one another that the buy the dip worked once again, okay, look, this is kind of quiet in here, but I am pointing out as it's going on, you got 10 minutes left. Like, hey, this is not a joke. These are massive, massive moves, okay, that are playing out, all right? Volatility is going to be with us. Even if it kind of dampens down a little bit into, of course, the holidays, it's still absolutely unequivocally with us. It's going to be with us. I think you really kind of need to heed the warning here of expected moves and understand, okay, that these moves, they're going to be hit. Like, this is, again, some big boy volatility. Doesn't just, go off into the night very, very quietly. Even though, again, volatility came down today, you would expect it to come down. You're coming into a 3-day weekend here. All right. Again, decent size, news drops tomorrow morning. Those are economic drops that could actually rock markets to some degree, because now we're in a situation where, once again, bad news can become and should become bad news. With that, S&P's reaching once again, not only towards the upper edge of the expected move, but very close to all-time highs. What a difference a couple of trading days can make in here. With that, stay tuned. Again, lots more volatility coming even as early as next week, but coming into the first of the year, yeah, this marketplace is going to spark once again and be rocking. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.